Have you ever looked at your paycheck and wondered where all your money went? You work hard, but by the time federal tax, state tax, FICA, 401k, health insurance, all of that comes out, your take-home pay is way less than you thought you'd earned. Let's talk about what's happening here. First, three things come out of just about every paycheck: federal income tax, state income tax, and FICA. Federal income tax withholding is based on your W-4 form. That's the form you filled out when you started your job. The more allowances you claimed, the less tax comes out. If you withhold too little, you'll owe it tax time. If you withhold too much, you'll get a refund, but that's basically an interest-free loan to the government. Here in Minnesota, we also have state income tax. Not every state does. South Dakota, Florida, Texas, and a few others have no state income tax, but if you're in Minnesota, expect to see state withholding on your pay stub as well. Now let's talk FICA. FICA stands for Federal Insurance Contributions Act. It's Social Security and Medicare combined. Now, some pay stubs might label this as OASDI for Social Security. That stands for Old Age Survivors and Disability Insurance, but it's the same thing. You pay 6.2% for Social Security and 1.45% for Medicare. So that's 7.65% total. And then your employer also has to match the contribution. So if you're paying $186 for Social Security, your employer is also paying another $186. That money goes toward your future Social Security benefits and Medicare coverage. Now that we've covered the taxes, let's talk about the more optional choices. Things like 401k contributions, health insurance premiums, and HSA contributions come out before taxes are calculated. So that means that lowers your taxable income. Let's say you contributed $300 to your 401k. You're paying yourself first for retirement, and you're lowering your federal and state taxes because those taxes are calculated after your 401k comes out. So if you're in the 22% federal tax bracket, that $300 contribution might only reduce your take-home pay by about $234 because it lowers your tax bill by $66. Same benefit with health insurance and HSA contributions, which can really add up. After all those deductions, what's left is your net pay. That's what hits your bank account. In our example, $3,000 gross becomes $1,795 net. One more thing, in a couple of weeks we'll be talking about W-2 forms. That's the tax form your employer sends you at the end of January. All of the stuff that shows up on your paycheck during the year gets summarized onto your W-2, which becomes a major input into your tax return. And that's what comes out of your paycheck and why. Understanding this helps you make smarter decisions about your W-4, your 401k contributions, and your tax planning. Hit like if this makes your pay stub make more sense, and comment with what tax topic confuses you for next week.